higher for longer and maybe a slowing economy and a pretty high capital gains tax proposal that's not getting as much attention as it should derail the rally we've had in stocks. Let us dive right in. We've got Fundstrat's managing partner, head of research, Tom Lee. Here on set, Vertus Investment Partners, Joe Terranova, of course, both CNBC contributors, and our senior economics reporter, Steve Leisman. And that is where we have to start, Steve, because GDP is really the three letters that seem to have defined the day.
Yeah, I think that's right. But there's different aspects to it, Brian, and I don't know the extent to which the market is reacting to each one. I think the miss on the growth side is not the most worrisome part of it. In fact, I kind of like what I saw there in the sense that there was a big subtraction from inventory and from trade. And it's very normal, by the way, to look at GDP in this respect, to see how businesses and consumers are spending. And that was pretty decent. If you look at real final domestic purchase, it was 2.8%. It was down. By the way, that is more or less the soft landing we're kind of looking for. What was not the soft landing we're looking for, but there are those numbers there, by the way, Brian. You can add up those two on the bottom left and add that back to GDP if you want an idea of where it might have been if not for those big subtractions. So the real story is the inflation story. And those numbers came in hotter than expected. But there's an asterisk we can put next to it, and we cannot write that asterisk out till tomorrow morning. And the story is this. We know that inflation in the quarter was higher, but where and when was it higher? So what we're going to look for tomorrow is, was January and February hotter than we expected, whether those be upward revisions, or was March hotter? And if it ends up being March, well, then the sell-off makes sense, and maybe there's more to go because it means that the inflation problem we knew we had at the beginning of the month continued and is actually worse than we expected at the end of the quarter. So that's what we're looking for. If March is subdued, if it comes in 0.3, I think we're okay. 0.4, that's another story. And now we've got a continuing inflation problem, and that idea of the Fed cutting rates gets extended further into the year.
So when's our next meaningful data point, Steve? Like, what PCE obviously is massive, but like after that, what are we looking most? What are you looking most closely at?
Well, you know, like a good father, I love all my children, Brian.
Oh, you got so many. CPI, PPI.
Yeah, and it's gotten, there have been more children that we've had to watch lately, of course. We didn't make such a big deal of the inflation component of the GDP report, so it changes, which makes it interesting, of course. But the Friday employment number, I think, is the one we're looking for. Looking, again, for that gradual weakening on the activity side of the economy, and then looking at the wage side to see if there's still danger there that higher wages are pushing up and moving inflation.
All your children, some newly adopted, I think, because we're looking at things that we never even looked at recently before. It's like that weird kid Oliver they brought in the last season of Brady Bunch. Steve Leisman, thank you for the cousin, because everybody was too old. Steve, thank you. So there's the perfect setup. Let's get now reaction and maybe what to do. Tom Lee and Joe. Tom, I'll start with you. Honestly, I don't think enough attention to this capital gains proposal we got last night. I think that might be sprinkled in here. But anyway, GDP's getting all the attention. Steve laid it out nicely. What is your take?
I agree with Steve's point. You know, the GDP number did catch people off guard. The core price index being basically a hot number, 2.9 year over year. But it is going to come down to the revisions, which everyone expects. I think there's also now a disconnect between the CPI numbers we're seeing and like what we hear from companies or even, consumer surveys. I mean, for instance, in just this first quarter earnings season, the mentions of inflation as a problem is now at the lowest level since the first quarter of 2021. So it makes me wonder, how is inflation accelerating when fewer companies are even mentioning it as a problem in the first quarter? I think that there are catalysts, in the next couple of weeks. I mean, the first one, of course, is tomorrow to see really what March inflation looks like. But I think the earnings backdrop has actually been very supportive. 80% of companies are beating. So as painful as the last couple of days have been, and really the last couple of weeks, I actually think it's the risk reward's positive here.
So the firm landing is here, in my opinion. We did hear from Whirlpool. We did hear from Harley Davidson that they are having difficulty passing through rising input costs to the consumer. And that's not a bad thing. In fact, if you look at the price action today, right now, where we are in the market, we have recovered everything that we lost after the GDP print and after the inflation figures were released. So we've recovered it all. This is really where we sit in the marketplace right now off of Meta and the spending that's attributed to Meta. I think that the rest of the world is experiencing a disinflationary trend that ultimately is going to get exported here to the United States. Brian, you look at Europe, you're talking about inflation readings that are in the twos, whether it's France or Germany. Italy's at 1.2, Asia is in outright deflation. That's coming here, and I just don't think that's a bad thing. And the premise for buying equities in 2024 never was about the Fed has to cut rates, because if it was, at the beginning of the year when there was 7 rate cuts priced in, now we're pricing in 1 rate cut, maybe in December, well, the equity market would be lower from the starting point. We're actually higher.
And John, jump in on this too. Can we just remember the Super Bowl with the Falcons and the Patriots, and the Falcons are up like 100-0 at halftime,
28-3,
whatever, and then Brady comes back and wins. Can we all just acknowledge that the stock market is up this week? Even with today, we're still higher for the week. We're only like 1% or 2% off all-time highs. Market has one big down day.
Profit margins are strong. Everyone wants to focus on the economic recession that never happened. The real recession that happened that matters most is the earnings recession. And we've come out of the earnings recession in the second half of 2023 for the S&P and the NASDAQ. We're waiting on the Russell, and that's a catalyst.
Yeah, Tom, though, we've got a couple big names tonight, and we'll get Dan's take on that in just a second, Dan Ives. But, I mean, what if Microsoft and Alphabet soil the sheets? I think is that the family-friendly term with the numbers tonight? I mean, then what? Because Meta kind of did.
Yeah, I mean, Meta was up 40% into the earnings report, so I think expectations were high. I think there has been sort of a reset, so I think there's if it's a beat, we could see stocks rewarded. And overall, it has been a good earnings season. 80% of companies are beating, and if you really exclude energy, you're really pushing up against double-digit earnings growth year over year. So it's exactly what Joe was saying. It's been a pretty nice earnings recovery. And I think as you get into the second half of this year, healthcare no longer has negative year-over-year comps. So, you could be back into the mid-teens earnings growth. So I think the earnings backdrop's really supportive, and there's still 6 trying to cash on the sidelines.
So we get we get some good numbers tonight. Well, more importantly, Tom, I think good guidance, right? Not to forget about the backwards. We want the forwards looking. That's good. This sort of mini market panic probably could come to an end right
That's right. I think part of this is that as Steve was saying, the inflation, so market's perception of inflation is not clear right now, because I think there's a camp of folks who think it's reaccelerating, and I think the March CPI kind of fueled that narrative. So maybe April is really the tiebreaker, and that's not for a couple weeks, but it's also doesn't mean you have to wait forever to get some idea what's going on.
All right, it's Tom Lee. Very different backdrop though than a month ago. Tom, we really appreciate your views. Thank you very much. All right, still got Joe here.